Stop chasing. Look, it's Marcel, aka Honey Bunny Sunny, and you know I'm on a mission to make you some money. So look, today I'm doing something a little bit different. I'm going and scouring the internet and I'm finding investment advice and I'm giving my reaction to it. I'm giving my feedback to make sure that everything that you're hearing and learning across the internet is in fact true. And who am I to do that? I'm somebody who has over a 90% win rate. Okay. Now, first person is David Paul, right? David Paul is, an elder investor. He's been in the game for a very long time. So we're about to check out a video that he posted and let's see, what I think about it.
The best trades occur after the masses have been stopped out. Okay, and markets tend to move, and that's because the big fellas up there, they can't press the wee button and get in because there's just not enough liquidity there for them to get in size. So they have to, in fact, engineer 100,000 guys like you, sir. Pull you one way, your stop loss gets hit. That, in fact, sets off a sea of liquidity for them to get in. So even if you don't have the strength, or what I refer to jokingly as the testicular fortitude to buy at the level, if you can get in and you can see, using your cup here, you can see that lots and lots of people have been stopped out before you get in, then you're probably on the right side of the trade. The good trade's always the hard trade, always. Not emotionally, not intellectually difficult. In fact, the thicker you are, the better probably, but emotionally difficult.
So what do I think about this? Absolutely. Absolutely. This is something that I talk about a lot on my channel, right? It's being in opposition of everyone, right? That's what the big boys are doing. They're being in opposition of where all the money is, where the liquidity is. The liquidity comes once people are like, I can't take it anymore, right? So true, so true. So it's like, all right, Marcel, well, how do I prevent myself from being one of these millions of people that get scooped up in this? I've talked about this before as well. Go watch my size for zero video. I'll talk about it here though. You size for zero, right? We enter near order blocks, in order blocks when we get reversals and confirmations, but there's still the occasional sweep of those confirmations to the downside before the actual move is made, which is called a delayed reaction. Delayed reactions is an institution's favorite move to get you out of there and to get them in there. Okay. Again, like he said, they're buying in super large quantities. So if there's not enough people, if it's not enough stuff on the market, it's like, how in the world can they get in to get these large quantities to make the money hand over fist that they make? And this is the way. Okay. So they come, sometimes it's just below the level. Sometimes it's significantly below the level, but it's still, it's still showing some sort of slowness. Right. So it'll come below the level and then it'll start to reverse, essentially doing what it should have done, maybe $1 up. OK, so when you're size for zero, this is how you combat it as a retail trader. There's no other way. Right. You scale in once that delayed reaction takes place. OK, so your size for zero, it may work out and you just make a little bit of money. But when you size for zero and allow it to come down and then get that delayed reaction and then you add on your contracts, well, now you're participating in the game with smart money. Now you rolling with the big dogs in the institutions, right? This is how you make money. Okay, now it's not every day that this happens, but a few times a month, there's going to be a major sweep like this, right? There's an even more major one about 5 to 10 times a year. And sizing for zero is how you do this. I tell you guys this all the time. Okay, you don't have to go in full size. Nobody's holding the gun to your head saying you got to go in full size, right? You go in with the smallest amount, right? The most that you're willing to lose on a trade that you would be leveraging more. So if you're leveraging 2,000 and you don't want to lose more than 10%, then 200 is your size for zero order. And you can scale that based on whatever your bankroll is. All right. Now, like I said, when that delayed reaction happens, when all those people get swept out, when they take them out, when those institutions are like, all right, we got them now. Now we're ready to get in. Right. When it feels like the trade is done, that's when you add on. Do not do this with full size. Doing it with full size is irresponsible. It's gambling, right? But entering at a level and then waiting for it to do a delayed reaction just below that level is smart money, right? You're following smart money. You're following institutions. I hope this video was helpful. Remember, invest smart, live free. I'll see you in the next one. Peace.